Hey everybody, welcome to Making Sense of It All with Jesse Stakes. This episode is being brought to you by Sawgrass Finance. Growing businesses face many roadblocks as they mature, especially access to capital to fund their expansion. Sawgrass Finance is funding the growth of American entrepreneurship by providing businesses with the flexible working capital to reach their goals that they need. At Sawgrass Finance, you get your business funding today while you're building the foundation of future bankability. Learn more at sawgrassfinance.com, and don't forget to mention that you heard it here when you do. So this episode was a lot of fun for me. I have Steve Strum, financial advisor from Northwestern Mutual, joining me today to talk about all the things that keep business owners up at night. In Steve's world, each day is filled with potentially tough and uncomfortable conversations that deal with all the what-ifs that they could potentially face. I can tell you that this was definitely not one of those tough conversations. In fact, it was probably one of the easiest interviews I've ever done. I hope you enjoy my conversation with Steve Strum. Let's jump right into it. Steve, thank you so much for joining me.
Thanks, Jesse. It's been good to know you and good to see you.
Absolutely. We've known each other a long time now. In a prior life, we used to do this together.
It's funny because we were just talking about, drive time media and how long of a podcast. I literally, for all the people watching this or listening to this, I have a timer set just because we can say hello for a half hour and not actually say anything. So,
right.
Great to be to collaborate with you again, man. I've been watching your stuff, making sense of it all. It's pretty cool. The sense considering your, universe that you and I survive in. But, it's very neat to watch you putting out this content, and I'm happy to be on the podcast, man.
Yeah, I'm glad to have you. One of the things we always talked about when we did our show over at Buzz was that, we never get to talk about you. We never get to talk about what you do and what what you're all about. You're always putting the spotlight on somebody else, onto a business owner. So I'm very happy to be able to do it for you today. That being said, you're a financial advisor over at Northwestern Mutual. And the word financial advisor, that's a huge umbrella. A lot of people, they have different thoughts when they hear the word financial advisor. We'll go very broad for right now, but tell the audience, what do you do? What is a financial advisor? What does Steve Strum do every day?
Sure. Well, let's maybe take a sidestep real quick and talk about, the umbrella of financial advisors. It really falls down into really two different categories and, a handful of products. So the two categories are financial advisors that serve at the fiduciary standard, and then the ones that do not. So that's a big deal. And it came about in 2008 because of the financial crisis where they had some requirements. Now, of course, I had been serving at the fiduciary level before it was cool, if you will. But basically, the fiduciary advisor level, which most of the times is going to be some level of a fee-based advisor, instead of charging commissions, they charge a fee, generally speaking, is the highest letter of the law. But inside of financial advisor, whether it's the fiduciary level or not, is the different services that they provide. There are what are known as product advisors. So a product advisor is somebody who's, you're 35, you're married, 2 kids, you need, life insurance, Roth IRA, stuff like that. And then
Right.
there's a process advisor. Now, we still have financial products for sale, right? We still have the life insurance and the Roth IRA and the investment accounts and the rollovers. We still have all of the things that you would expect me to say. But the process advisor, which is what we do that's a little different, will actually try to capture, what are your 3, 5, 10-year goals in life? Now, whether they're personal, professional, or financial, it could be any one of the three. And then what we do that's different is we actually create a plan that attacks their goals, and the products are driven from the process versus the products driving the process based off of where you're at.
So more consultative and less product driven.
Well, and a lot of stuff we do. I know we were talking right before we started the podcast about some of the speaking engagements that I do with professional organizations. I was just in Orlando last week doing one. And, if you think about professional trade organizations, significant amounts of student loan debt. I make exactly $0 helping somebody fix their student loans, and they might not even be broken. But I feel that it is a moral obligation if you think about like an attorney, a doctor, accountant, financial advisor, I mean, there's an opportunity for these people to be in, mortgage territories worth of debt. And I just don't believe I earned the right to say, hey, do you want to buy some, whatever it is, without addressing that elephant in the room? And I make exactly $0 to do it, but it's the right thing to do.
No doubt. Well, and to your point, if you don't address it, it's going to become a problem down the road. So if you want a client that's in good financial shape, and if they're where they should be when you're, as far as when you're dealing with them, then you have to address it too. It's not one of those things to where, yes, they might not think it's the important thing to talk about in that particular meeting, but if you don't address it now, you're going to have to address it 5 years, 10 years down the road.
Absolutely. And a lot of that, the reason behind it, I know that we'll get into my why here in a minute, but
Yeah.
I'm the first guy to put on the tie, right? My family was, firefighters working in hospitals. My brother's in the army. I decided it was, I was going to go to school and then, continue grad school. I know how it feels to have a $150,000 piece of paper on my wall that says how smart I am. I know how it feels to have to make payroll. I just don't think that I can go to somebody and say, hey, you make all this money and you need to give me this much money, right? Whatever piece of the pie that is allocated for Steve to help me make your goals. But if I know on the backside, if they've got a $200,000 student loan debt and they let that thing ride for the 25 years, depending upon their interest rate, not only is that loan has doubled since they got it, if they pay it all off, but if they don't pay it off and they do some of the programs that are out there, nobody really realizes that 25 years later, that's an income tax event. So at least under current law, which was changed in 2023 is, with the student loan business, you have a $200,000 student loan debt, you do one of the programs and you pay back 50. Well, that 150 that you didn't pay back plus the interest upon the time by which it gets forgiven, you get a 1099. And people are like, oh, I didn't
You
realize that.
just you just made everybody hit the pause button and call their CPA is what you just did.
Well, there are solutions, and so I'm sure there's a link on this tab somewhere down here for them to call me. No, there are really great programs that are out there, and I actually do this for free because I think that it's important. Half the time I'm talking to the professional trade organizations, I'm talking about debt. And we actually partner with some financial institutions, like more in the banking and loan world, that actually have a service to help them understand that. And here's the power behind that, right? And I know that this is just a piece of what we do, but this is a big piece of where we're different. So let's just talk about how I approach that client and say, hey, you're an attorney, you're a doctor, whatever, blah 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 blah. Steve Strum, yay. And we start talking about the thing, and we get to the debt. And most advisors will be like, okay, great, student loan debt, awesome. Oh, wait, they make $250,000 a year. You need to give me 20 grand a year or whatever. But if we deal with the student loan debt correctly, it is in their best interest. And so, for example, under the current programs and some of the legal changes that have happened in student loans, I do a lot of work here. And last year, we had an individual that was, a couple few $100,000 in debt just by going and recalibrating how this individual's credits were being credited on the existing program, something like 90% of the student loan debt removed. Just half-hour phone call. Now, that's not typical. That's definitely unique. On the other
Right.
scale, side of the scale, a doctor, up in the Northeast, did not make sense to stay on it and ended up saving them about $50,000 of interest and lowered their payment. What they did was they took the differential in the payment, they put it into an investment account and let that thing cook for 25 years. So when that income tax event actually occurs, there's money that they've been saving all along the way that will allow them to address the tax event. So it doesn't freak them out, both now as they're trying to pay it back, but then they get this giant, smack in the face with debt in 25 years.
Well, and I think it brings up a point as far as I think it becomes such a big item when people start trying to wrap their head around it. And if, like you said, if they're a professional, if they're a doctor or if they're an attorney, whatever they are, they're really good at doing what they do and they focus on it every single day and they're helping other people out. But they don't focus on helping themselves. They don't realize that this could cause them a very large problem down the road. So I think the things that you're bringing up, they're incredibly important. And I think that it's you're their advisor. You're the person who's helping them. So I think if nothing else today, if we accomplish the goal of people hearing that, mission accomplished.
And if that's the only thing that we get before we get tuned out on the podcast, for all, For all your listeners, if there is a question out there about this looming student, and it's causing a lot of anxiety. I mean, it is a $3 trillion situation that we're dealing with. I'm sure that there's links to bios on the website. I'm happy to answer the question, and I'll give them at least my thoughts and how I can help. And of course, I would never charge somebody for that because that's just the right thing to do.
No doubt, no doubt. So that kind of, you mentioned it and you talked about your family a little bit and where you came from.
Yes,
But
sir.
one of my favorite things to do on this show is always to kind of figure out, why do people do what they do? Why are they passionate about what they chose as their profession? And so I'm going to ask you the same question. What is it that inspired you to become a financial advisor at Northwestern Mutual?
Sure, that's a great question. And I'll try to be as concise as humanly possible. So, in school, I was I went to University of North Carolina, Wilmington. I was in business information technology school, right? So, like computer stuff. Came back to South Florida. My uncle ran a flooring company, and he had some heart issues, and he served in a very paternal role for me back when, my mom was a single mom, and Uncle Joe, so to speak. Got an opportunity to go back down to South Florida as an adult, run the carpet store, and we sold that company. I quickly learned the difference between a P and an L, right? So, right, profit and loss. I thought I was going to get this big check, right? Like anybody in your demographic that remembers Ferris Bueller's Day Off, right? I was going to be the carpet king of Miami versus the sausage king of Chicago. Anyway,
Nice.
I thought I was going to get a check, right? I was like, I'm 23 years old, master of the universe. I'm going to get a check and I'm going to be great. Well, I got a check, right? And I got a little check. And I was like, oh, that's going to cover rent. But I did get a really nice area where I got in the deal. So, we sold the company. I went to work for telecom. And then I came to Jacksonville actually with the Sprint and Nextel merger. It was really an interesting opportunity. I was very, very young. I was 28 years old, one of the youngest managers out there. And I get to Jacksonville and I'm in charge of a $30 million P&L. And that was an interesting merger because the technology just didn't connect right. So the Nextel customer and the Sprint customer were very different, right? The Sprint customer is the guy in the tie, at least historically, and the Nextel walkie-talkie thing is for, predominantly for like construction based, right? So my
Yep.
job was to try to help knit two completely different universes together. And then all of a sudden, there's this young lady who comes walking into the building, and we're talking about telecom solutions. We're not just talking about cell phones, right? You're talking about cell phones, you're talking about internet stuff, all the racks and all the things that make all this work, right? And
Right.
20 years ago, or so, yeah, almost 20 years ago. So obviously the world has changed dramatically, but none of their stuff worked. And they came in, and this individual was very unhappy, and I solved the problem. I was like, well, give me 24 hours. I solved the problem, got the finance stuff corrected, and everything worked. Well, the CEO comes walking in and, is like, hey, are you Steve Strum? I'm like, yes, sir. And he's like, yeah, I'm the CEO of this financial institution. And you're not a cell phone guy, are you? And I said, no, actually. He goes, are you in grad school? I was like, yeah, I'm in grad school. What are you in grad school for? I was like, finance and accounting. And he goes, I'd like to take you to lunch. And then we went to lunch, and I had the opportunity to become probably one of the youngest executives in the local banking and credit union space back in '07, right
Okay.
before 2008. That was fun. And so then I'm in grad school. I'm in banking. It's 2007, 2008. The boss's wife gets breast cancer, and here I am, the CEO interim of this organization, and I had no idea. I called my dad. I was like, Dad, I'm president of the company. What do I do? And he goes, I forget I'm the president of the company. And he goes, was like the boss's wife got breast cancer. Now it wasn't, they didn't just flip me the keys and they're like, we'll see you later. Cause it's $130 million and not your
I was
money.
about to say they've got a bunch of clients as well, so I can't imagine they were just.
Right? We had a great team. Anyway, it was really a baptism by fire, and it was a really awesome experience. So I kind of went from telecom financial services, recruited into financial universe, and then through the experience of the downturn, I actually had the opportunity to work with companies like Northwestern Mutual, New York Life, Merrill Lynch, and we were designing some very interesting products in order to help stabilize the credit union. Well, the great news is the boss's wife did not pass from breast cancer. And that was, I mean, obviously that's the most important thing. And
Sure.
comes back, right? And they go through transition plan. And I start getting the phone calls. And those phone calls, right? You start getting them like, hey, you're, Steve Strum, savior of the credit union, blah, 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 blah. And of course, I'm like, well, no, it's the team, it's not me. Anyway, I ended up getting, opportunity to interview some really great folks, and a gentleman from Northwestern Mutual who was the managing partner at the time was the most honest and sincere person. And I was like, you know what? I'm 34 or 5 years old. If I'm going to make the jump, I'm going to make the jump now. Because if I jump and fail, at least I have time to recover. And 13 years later, I'm still happy to report that I'm following the opportunity to serve other people. And, throughout life, your why becomes their why. Because,
Sure.
oftentimes people, of course, the stock market is very sexy, right? Stocks, bonds, mutual funds, that, it's always fun. Pie charts, it's great. But some of the things that we do more in the estate planning world, which is the insurance stuff, estate planning with attorneys, tax planning with lawyers, and stuff like that. When those things happen, whenever you're, wherever you're at on your universe, if grandma dies at 85, it's a terrible experience. If your minor child dies, it's also a terrible experience, but it's a different kind of terrible, right? Because it's a different mindset. Grandma's 85, lived a great life. It's terrible. My minor child, or has gone too early, and so one of the things that we do is I can't remove anxiety. But what I can do is I know that if we've done a great plan for folks, and this has really become the why over the last, 20 years, is the stories of all the people that believed in me to make sure that in case something goes sideways, that they're going to be okay. And I have lost count of how many funerals and I have gone to. Everyone that every client ever has passed away, even if I had to fly there, do the funeral and come back, because I know I try to be in the back of the room, but I know that my presence there will remove at least some of the financial anxiety. I mean, you don't walk into a situation like that with, like, the publisher's clearinghouse check, but
Right.
you represent some level of stability and peace. And the amount of folks that I've had feedback on where it's like, gosh, man, this is terrible, but I know that we're not going to have to make these financial decisions, like, I don't know, moving somebody out of a house as a child because they can't afford it.
Well, you also make it human rather than just looking at paperwork from Northwestern Mutual. They're looking at Steve Strum from Northwestern Mutual, their guy, if you will. So it makes it human. It gives them a person to talk to, and there's trust there. When somebody cares enough to be there for something like a funeral, then there's trust that's built there.
Yep. And it's always interesting the feedback I get, because whenever I do go to those type of things, and it's not just funerals, I go to weddings, obviously anytime when a client invites me to something that's important in their life, if I can make it, I will absolutely make it. And I
I
also,
don't know that anybody would know Steve Strum and think of the funeral guy. I know that
yeah, no, right.
people know you're the life of the party, not the
No,
downer.
no, I know. And I always go there. I always go there as friends of the family, and it's always interesting because like if I go to like a wedding, of course, go with Tiffany, go with my wife, and if I go to some of the other ones, sometimes it's just me, but I'm always a friend of the family, and it's always
Sure.
interesting, especially when I show up alone, what people's reactions are. Like, okay, who's this guy in the corner that's not saying anything, that's dressed all in black? So anyway, but no, it's my why has become service to others, whether it's my family, whether it's my community, the church, my client base. I mean, Jude, even the TV show that you and I did for years, I don't think we ever talked about what we did ever, which in the beginning,
Not at all.
it's always been about how can we create a platform to shine a big bright light on other people by which they can talk about how great they are. And at the end of the day, it's the whole Zig Ziglar. You help everybody get what you want, and eventually you'll get what you want. And I've just really put all my chips on service of others, and professionally, personally, and it's really great that I've had so many opportunities to make good friends because of it. You being one of them.
No doubt. No doubt. I couldn't agree with you more. One of the things that we have done a lot together, and I think it's, and it swings both ways, but we've dealt with business owners and people who run their own business, people who have family businesses, and their why is a little bit different than your typical person who is concerned about their family. Not that that is not a big part of it, because it is, but they have other things that they're concerned about as well. And can you talk a little bit about the things that you do for business owners that make sure that they have security for themselves, for their family, and for the basically for the the ongoing life of that organization that they create?
Yeah, it's a super hot topic. I mean, the statistics, but your audience may not know. There's still, after COVID and the Great Resignation, I guess is how they call it these days. You've got 10,000 people a day leaving the workforce.
No doubt.
They're aging out. And you and I, I'm 47 this year, and you and I, between that 35 and 55 group, there's just not a lot of people, because they're, between 1975-ish and 1989-ish, there was a a lower amount of births because of the because of the financial conditions of the economy. There's a correlation, except for COVID, that when the economy's bad,
Here to explain that one, Steve.
there was nothing else to do. So right. So there was yeah, whenever the economy's not so great, their birth rate goes down. So you've got a bunch of boomers, right? They come back from war and, they haven't seen their loved ones in a month or two or, 9 months later. Now all of a sudden you have a bunch of kids, the boomer generation. And then you and I in this XY generation, birth rates were lower just because of the economic circumstances in the 70s, et cetera. And now all of a sudden you get all these people back here, these young kids, young 30-year-olds that, I mean, young kids, right? Millennials now are 30 and 35 years old, to speak to how old we are, sir. But, there's not a lot of us, right? So the business owner. So the business owner, I set that as the stage because the business owner demographically has another child, which is their business, whether it's construction, whether it's a technology company, they really have born another child. In many ways, they look at that as a child that produces revenue for the family. Well,
it's a great point.
There's a couple things, right? First, how much is that child worth? Because eventually they're going to have to sell it. Now, imagine selling one of your children. Probably not something you want to do. Depends on what they did with the car, but right, predominantly, you don't want to sell your children. For everybody here on the call, we do not want to sell our children. So one of the things that they are struggling with was how much of that company, what's the value? Who's
right?
Right? Of course, and we also don't want the IRS to be the largest beneficiary of their life's hard work. And with the tax code changing here at the end of 2025, that's going to be something that's going to be a challenge. So they've got this business that's provided amazing things for their family. And what we help them understand is the clarity. Saying, okay, do you want to exit the business? Do you want family to own it? Do you not want family to own it? Do you want to maintain control of it? Which the answer is yes. So you can be the old guy drooling in the corner, sweeping on the floor until you're ready to give it up. How much is it worth? How do you find a market for it? And then how do you finance it with, could be significant dollars? And then during this operation, if it's done well and it's a 10-year plan, I hate to be the boogeyman, but what happens if something goes sideways to you or your successor? What do we do in order to mitigate that? And so I really help business owners understand that their business is going to live into perpetuity by which they can keep control of it and get a price that's fair because, they think it's like, worth up here. And of course, it's maybe not so much, but help understand that clarity so that they can be confident with what is their largest asset that they have used their lifetime to build. Does it and how does it continue to provide benefits generationally? Because if I do it right, I talked to, Jesse Stakes, Jesse, you may not know your great grandchildren, but they're going to know your name, right?
Sure.
And it's really cool because I've had the opportunity to do this with, clients over the years where I love that. My favorite conversation is it's no longer about you. It's about your great grandchildren. And of course, their kids are like, 8. They're like, wait a minute, whoa. Great grandchildren, I'm like, yeah, here's the math, here's the numbers. You're going to be fine. Your kids are going to be fine. If we do it right, your grandkids and your great grandkids are going to be fine. And they're going to remember what you did to change the entire dynamic of the family forever. Or they could spend all the money and squander it. So it's we don't go with the fear, we go with the opportunity. But it's really cool to have that dialogue, and I've had the opportunity to do that on multiple occasions.
Well, and my mind goes in a million different directions as you're talking because there's everything that you said is 100% valid, and they're all very fair, true points. One of the biggest things that I notice is that business owners don't engage someone like yourself early enough in the process. They are so focused on running their business, and they are so focused on getting it off the ground and getting out of that survival mode and into thriving as a business owner that they don't think about these things. They don't put these things in place. And so they're having to go back and make corrections in the middle of it, after establishing the business or after getting their kids involved. They're having to make all these corrections in the kind of as they're going down the road at 100 miles an hour, rather than putting them in place in the very beginning when they have that time to think, when they have that headspace, because it's just not things that pop up until, oh my God, I have something that's valuable. Now what do I do with it to make sure that it's here for my kids, grandkids, and great grandkids?
Well, they also don't have any money. So
True.
that's the other side, right? It's like they don't have, I can't tell you how many business owners that I've had the opportunity to serve, and they're like, Steve, I can't buy the disability insurance policy to cover if I get hurt and my business doesn't get the lights turned out because I can't afford it. Everything is going back into the business, right? So just because, you have somebody that you work with professionally, it doesn't mean the dollars are going to be huge. There are so many clients that I have had the opportunity to serve that said, okay, what's the future value of your company, right? You go through and you do the math and it's like, oh, here's the value of your company. And of course, they're like, there's no way. And I said, well, this is what you told me. Here's the math. And over time, you kind of review that and they get like a different opinion. But, just because you're a business owner that's starting a business that, myself included, for years, I paid my staff more than I paid me because it was all about making sure the business was operational and we had people to serve clients so we could grow the business in the long game. But it doesn't mean just because you're starting a business and budgets are tight that it precludes you from doing some of the basics, right? Now, as you make more money, one of the things that I have found I do a lot of work with for business owners, I do actually, in some cases, talk to their lawyer and their CPA more than I
Right.
talk to, because I can do a great job designing funding strategies and I can do a great job of making money, but I defer to the experts, whether it's estate tax law, whether it's accounting law, whether it's, write-offs. Everybody always wants me to give a CPA opinion, and I will actually get their CPA on the phone, and get that opinion. I'll deliver it with the CPA. But what I have found often is trying to help business owners understand that there's different pockets of money. And depending upon how the accounts are structured, some of them actually can become a write-off. So it's still their money, but they do have the ability to, whether it's, defensive planning in insurance universe or offensive planning like in a 401k, that they do get to use their money and then deduct it. And if they're a business owner, sometimes they get to deduct it from the business and from their personal income. So it's not all about using all of their capital. It's observing the tax laws to make sure that they are efficiently and effectively taking advantage of what's the law of the land.
No doubt. Well, and along those lines of people not being able to afford things when they start a business or, as far as educating people, you do a tremendous amount of speaking engagements. You do a lot to help people that they may not be a client right now. They might not be a client for years, but you're lending your expertise. You're giving your professionalism to trade organizations, to people, in whether it's attorneys and the bar associations or other industries. You're out there and you are educating people on what's available and what they potentially should be doing as they can.
That is, I do a lot of those. And it's interesting that you mentioned the bar, right? I just got back from an event. Lawyers are such a great example because, the reality is that, someone in legal profession is a target client for myself and for you and
Hmm.
many providers, right? You have high income, great capacity, intellectual people, that are trained in the art of persuasion. So, you're getting into, some debate of the letter "if" or the word "if," right? That does occur. But there's a duality there because there's a lot of attorneys that would be great clients, but there's also a lot of folks in the legal profession that serve a lot of great clients. And I have just put out content, and I actually got registered many years ago with the Florida Bar to provide continuing legal education. I'm worth 6 credits. I think I'm one of the highest, if not the highest, non-lawyer accredited CLE provider in the state, or at least was upon renewal. And the topics we cover are the topics that they can actually use in their practice, sometimes for themselves, but then also something that they can use for the business owner they're serving, right? So whether it's about debt management as the lawyer or, investing, stock market after Corona and, all that changed, or I'm a lawyer, now what, basic financial planning, or into the business universe of I'm a business owner, now what, or how do I value a company, or how do I transition it, whether it's family or a third party, or, I sell it to my employees, things like that. And so those speaking engagements, they're always free, right? I never charge. And I never talk about, you need to buy these products. It's always about educating people on something that is the hot topic of the day.
No doubt. Well, and kind of along those lines, the hot topic of the day, I think the current market is somewhat unique. I mean, whether it's on the banking side or just in the economy in general, there's a lot of question marks out there. And I think that one of the things that I see on a regular basis, especially in Florida, is that people are starting to become underinsured. Are you seeing that in your market? Are you seeing that people are underinsured in your world, or are you seeing that people are adequately insured?
You know, that's a great question. Because in insurance universe, there's two kinds, right? There's like retail insurance, which is your car insurance, your life insurance, your homeowner's insurance. Something needs to happen in order for you to get paid. And then on the other side, there's institutional insurance products, things like permanent insurance contracts or bank-owned life insurance, right?
Right.
Where they do different things. So the retail stuff is stuff that's used for I'm driving my car down the road, somebody hits me, my car gets fixed. I have life insurance if I die prematurely, that kind of stuff happens. And then you've got estate planning stuff over here that has a little bit more permanence. But what I find is that we do a calculation of the need to educate people on what their lifetime income probability is. And we find that it's a little bit not necessarily of a taboo subject, but it's very uncomfortable, right? And people are, can you ever have enough insurance? No, right? Can the check be too big if somebody walked into the said funeral with that? Of course not. But what we do is we try to find the right amount between budget and comfort because talking to about mortality to somebody the age of 65 is terrible. People
No
would
doubt.
people would and have discussed their intimate love lives before they discuss that because the fear of that is very real. And of course, statistically, right, there's 11% chance you're going to die underneath the age of 65. And, in a disability universe in my world, it's about 40 to 50%. So flip of a coin. But the thing on the other side that we're seeing a lot of challenges with in your underinsurance question is that people are living longer. And
Right.
that long-term care business is a big deal. That's something in the neighborhood of, married couple 80-90% chance that one of the two of them is going to need some sort of assisted care, and that's become a very big topic because the cost of insurance, health insurance and care is increasing faster than the cost of inflation. And you and I, we can live 30 years in retirement where our great grandparents, they probably lived 5. So there's a pretty big issue out there, not so much from the underinsurance. Of course, there's always, you always buy more insurance, but really in how insurance universe, whether it's the car insurance stuff, the life insurance disability while you're working, or the long-term care stuff as you start getting older, how all those things kind of work together has really been something that a lot of people have been asking because you don't want to be insurance poor, but at the same time, you don't want to have a situation where something goes sideways and you're unprepared.
No doubt. Well, and to your point, I mean, I deal a lot more with the property insurance type stuff and trying to figure out if people can even get it in the commercial world lately, or whether it's workers' comp, different things that a business owner has to get. But at the same time, all of insurance, to your point, not just one type of policy. People are living longer. Attorneys, we just talked about them in a good way, but they are also suing business owners for a larger amount of money, especially in Florida. There has been new laws that are repealed protections for business owners that it's potentially costing them more on a lawsuit against like a slip and fall. There's so many things right now that are putting more pressure on an insurance company, and therefore they're putting more pressure on their policyholders. Just just by the nature of it, the math doesn't work out if they don't collect more money, then the math doesn't work out. Insurance company goes out of business. So I think there's a lot of question marks around it right now. I think that business owners and consumers alike, they see a policy going up in price and they get mad about it and they blame the insurance company. Well, blame life has changed. Life is very different today, to your point, than it was 40, 50 years ago.
Absolutely. It is a brave new world. I mean, just the velocity of money, right? A lot of people don't even understand what that is. To give you some perspective, kind of flipping into like the stock market, right? So 1987, the worst stock market drop since the Great Depression. The stock market, the Dow Jones Industrial Average, dropped by 500 points in one day, caused chaos, like chaos. And now when you're looking at it, we have 500-point swings in the stock market as part of daily operations. It's called the velocity of money, which is the speed by which money it changes, has gotten into a completely different universe. And with the advent of technologies, computer assisted, trading in the stock market, it's a completely different world. And whether it's insurance universe or investment universe, it is definitely important for people to stay current on their financial plan. In my world, whether it's a me or somebody like me, you got to keep on that stuff because it changes so much. And protecting liability, to your point, with business owners, far too often they just hold a bunch of cash in their business because they feel comfortable with that.
Right. It's
That
that fear of the unknown. They pull in tight and they hold on.
but that litigious event happens, right? And somebody needs to go through that kind of conversation. That holding cash in the business name does have the opportunity to be listed on the lawsuit.
Right.
However, if you are wise as a business owner and you start dispersing some of that money to you as the business owner under the appropriate business structure, whether it's LLC, S corp, C corp, et cetera, it does have the ability to limit that liability. And of course, back to insurance policy, go, whoever your PNC guy is, go make sure you have an umbrella to kind of create that wall. I don't, recommend any business owner not having at least $1 million of an umbrella policy, which basically covers any gaps. One of my team members drives down the road during work hours, gets in a car accident, and somebody dies, which we don't want to happen. Instead of them coming after the business, my personal assets, I carry an additional above and beyond my car insurance of, I believe it's $1 million, it might be two now, in order to protect that type of situation. And it's not just about protecting me, it's making sure that whoever I might get into some sort of an entanglement with, whether it's Steve as a human or somebody in the business, that I have resources to adequately care for somebody, as well as make sure to protect my own assets from being personally actioned.
No doubt. We could talk about this stuff forever. And I think I mean, there's so many stories, there's so many situations that happen where there's such a tremendous value to have, a resource and a partner like yourself working for them and advocating for them on their behalf. I wanted to switch gears a little bit and talk about something that you do. And we mentioned it a couple of times here, but you host a TV show over at Buzz TV and you have for a long time. How did that start?
Not
Tell me a little bit about it.
Not by myself. There happens to be another guy on this podcast that also hosted with me for a minute. Yeah, so the Jacksonville Buzz. It's quite the interesting story. So before I came to Northwestern Mutual, when I was at the bank, I was on a lot of boards, a lot of charity stuff, right? The CEO and vice president, lieutenant, a lot of that responsibility is philanthropic. And I've always had a philanthropic arm in my life. When I came to Northwestern, my ability to serve on the boards it became difficult, right? Because
Sure.
if you're, stockbroker guy, insurance guy, whatever, whoever you are as financial advisor, but if I get a call from a client and I'm like, hey, we need to trade $100,000 worth of Apple, something like that, and I'm at a board retreat, okay. The next time it happens, then they're like, okay, are you a philanthropic guy, are you a philanthropist, or are you a stockbroker guy? And so I had to kind of deboard myself. And what was really cool was actually behind me here is Jacksonville, and anybody who is in the area, you can't go downtown without seeing all the murals. My team actually sponsored one of those murals. It's on Main and Forsyth, and it basically was a really neat thing for us to bring culture to Jacksonville, which then brings restaurants and bars to the downtown core. It's all part of the revitalization project that you're seeing starting to take hold. And this is 10, 15 years ago. And I get a call from a gentleman that you happen to know about hosting a TV show. And I was like, TV show? I was like, about what? Because I don't know. I hadn't gotten that far yet. And I was like, right, exactly true. And I think that is actually 90% true. I'm pretty sure. Maybe 80 this year, far out. Anyway, it was just we're going to put a bunch of business leaders together and we're going to interview people and put a bright light. And I said, okay, I want to do military businesses. I want to do charities, lawyers, doctors, et cetera. And,
Right.
7 years ago, and took Northwestern Mutual 2 years to approve it. I do try to operate compliantly as much as possible because they just wanted to make sure that I have a mouthpiece and a voice and a camera, that I'm not doing some things that I should not be doing.
Sure.
Started filming, gosh, I think it's 7 years ago now, and it basically is it is a morning show that is focused expressly on what other people are doing in the community. Oftentimes, folks that may not have the budget to have television production, and we shine a big bright light on what they're doing in order to give back.
Nice. Well, and I know you guys do a wonderful job. The production is excellent. The people who run the studio are tremendous. Like Steve said, I definitely participated with him for about 3 years. We did a show over there, and I can't speak highly enough about those folks. They do a tremendous job shining a light on Jacksonville and all the citizens that are doing amazing things within it. So, Steve,
It make me look a lot smarter than I am, man. It does take.
So all of that being said, you know, if people want to get a hold of you and they want to have a conversation with Steve Strum about their own personal situation, about their business, or if they just want to join you over at Buzz, what's the best way to get a hold of you?
You know what? That's a great question. I am probably the most Googleable person on the planet. If you go to my website, which is, the Stephen.strum@nm.com, easily Google me, you'll find me. If you're on the social media of your preference, it's really easy. It's a hashtag, my first name, last name, Steve Strum. You will actually find me or potentially my son, who's a BattleBot competitor, which is probably a topic for another podcast. It's either me or a podiatrist in Minnesota. So, I am easily accessible on my website, Stephen.strum@nm.com. The hashtag Steve Strum is easy to find me. And then, of course, call me, cell phone, 904-505-8852. And then, I'm easy to connect with if you find me and you want to be on the show. If you're a business owner in Jacksonville, love to have you. We could schedule it easily through the website. And then, of course, if it's Steve Strum Financial Advisor guy, I'm happy to connect and, see how I can be a resource.
And you're just that. You're an incredible resource, and we really appreciate you coming on the show, Steve. Thanks for coming. Thanks for agreeing to be a guest.
Thank you for having me. I really appreciate the opportunity to spend this time with you once again, my friend.
No doubt. Talk soon.
Yes, sir.
I'll tell you, it's not always the sexiest thing to talk about, but it's absolutely necessary. I'll make sure that you have Steve's information in case you'd like to sit down and have some of those tough, necessary conversations that we all need to have sooner than later in our professional lives so that we make sure that the people we love and the things that we have created are taken care of no matter what happens. That's going to do it for us today. I'll catch you guys next time.